Hello, this is the trade site U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the short week beginning Tuesday, the 27th of May, post-Memorial Day, and ending the 30th of May, which is end of week. Let's talk about what we're going to see this week. First, let's start by looking at the S&P. We'll start with the S&P Cash Index, which closed at new highs for the year at 1900, and that means for once, if you switch it to the futures, we did not close at 1875. In fact, 20 points higher. Notice the high of the session, though, here when I go to the daily chart, the high of the session is exactly the risk line from that 13 sell signal back at the beginning of April. Now, granted, that sell signal already had its release to the downside, but it's interesting to see that risk level being used right now. And if we roll to the weekly chart, where we also had a sell signal here on the ES from the seeker perspective, we're nowhere near that risk line, but we have not really rolled at all. Still holding above the 10 EMA on that time frame. Let's also look at the NASDAQ index, which climbed actually pretty decent this week, but most of it late in the week on Friday. The ranges during the week were poor. Volume was poor. We'll talk about the volume number in a moment. Here's the SOX, also closed near the high of the week, and here's the biotech index, which didn't do nearly as much. Here's the oil futures. Closed over 104, and we're looking at a potential triple top breakout here over that 105 area. That's not pretty. This is the time of year for it, though, right? And here's the gold future, or the gold futures. All right, Nasdaq volume. Ooh, that's the ugly part right there. There's the 10-day moving average, is the blue line. We are at the low for the year volume-wise, and actually, what's disturbing is we're heading down as an average into where we were going into the holidays last year. I mean, look at this. If you look at last year even, which was pretty poor on volume, not a lot of days over 2 billion shares, as you can see. There's scrolling back, here's the 2 billion share level. Only a scattered day or two here above it. A lot of them were the options expiration Fridays. But the average, at least, would get up above that 1.7, 1.8 billion shares. This year, the average stayed above 2 billion most of the year. We had a lot of days over 2 billion shares, but we've slipped now. The average is 1.65 billion, and that's because this week, look at that. Friday we knew was going to be bad, people leaving early for the holiday, but just nothing over 1.7 billion and a low of 1.4, really 1.3 during the market hours on Friday. So that's not pretty. All right, let's take a look at what we got out of the futures this week. We will look at 10-minute bars in the futures contract so we can see the entire week, and we'll also switch a time template to the futures time so we can get the extra 15 minutes every day. And there you have it. So 1, 2, 3, 4, 5. So last Friday we closed, as we know, at 1875 on the ES. Monday, a little gap down and shot up early, and that was about it. Tuesday, a little gap down that we left behind and closed back at the low of the week. Wednesday, gapped up, opened at 1875. It filled the gap from Tuesday right there, and then a little bit higher, drifted into the close on Wednesday. Thursday, a flat opening, drifted higher in the morning, dead flat for the last 4 hours. Friday, small gap up that we never filled, and just a complete drift. The opening half hour was in a 2-point range, which was impossible to trade. That was your warning sign. Volume was poor, and then once everybody just gave up for the week, we just started drifting up as the sellers were gone. If we take a look at the NASDAQ futures, a little stronger. You can see a lot of it Friday, just once the sellers were out of the way. This thing went. Now this is the 10-minute chart, and you can see the 13 sell signals on the Comer. We've got 2 of them this week. One worked really well as a reversal. One worked as a pause point, and the risk line off of that was resistance all the way until the next day. So interesting stuff in general. I'm not going to go through some of the key daily charts at this exact moment. I don't see the point because we're heading into the long weekend. So Monday's a holiday. Tuesday will probably be a little light because it's the first day back. Wednesday and Thursday, hopefully get something going Wednesday or Thursday because then you're heading into month end, and we know they start to peg prices for the month end window dressing. When it's on a Friday in the summer, end of the month is Friday this time, the 30th. That's probably not going to be a lot happening next Friday, just like there wasn't anything happening this Friday. And they'll start to peg those prices by Thursday. So it's really, maybe you get out of the gate on Tuesday, probably not. Wednesday's your best shot. Thursday could be okay. And then they start to go out for end of month, being done with it. All right, let's take a look at the economic data that is due in the week ahead. So on Monday, we've got durable orders, Case-Shiller 20-City Index, the FHFA Housing Price Index, and then consumer confidence 30 minutes in. That's a big number. That's on Tuesday. So we watch for that. Wednesday, nothing, just the NBA mortgage index. The crude oil inventories get pushed because of the Monday holiday. They're on Thursday instead of Wednesday. Thursday, the weekly initial and continuing jobless claims. Second look at the GDP number for Q1, not as important as the first look. Pending home sales, there's your natty gas, there's your crude oil inventories. Friday, personal income and spending, PC prices, Chicago PMI, and Michigan sentiment. So again, I think focal point wise, that consumer confidence number, that could get us going Tuesday. You never know. I always come in back from a holiday. You never know. Are they going to go strong? Are they taking their time? Are they hungover? We'll find out. Wednesday, hopefully that'll be the day, but there's no economic data. Thursday, there's enough data to get us moving early. But again, after that, the focus is the end of month window dressing, pegging prices to where they want them to be for that. Not as bad as end of quarter, which will be next month. And by the way, the early July trading, often very good as you start that second half of the year. They peg the prices for the end of June to where they want them, and then they get moving. We'll talk about that as July wears on. Everybody have a great Memorial Day weekend, and we will be in the lab as usual, helping you make money trading. Have a great weekend.